What is going on, investors? Back again. Time to talk about Uber Technologies, better known as Uber. We've got a massive $105 billion valuation on this one. They just reported their earnings after the bell. We see the stock is down in the after hours about 2.6%, but that comes on the heels of a pretty strong day today where they were up 6%. The stock is really trading at or very close to a 52-week high, and we see over the last year, this stock is up big, about 46%. Just year to date, this stock is up about 16%. Now, the stock has been in the news over the last few weeks making acquisitions. They acquired alcohol delivery service Drizzly for $1.1 billion. So Uber's really moving into the delivery space. When we jump over the numbers, we'll see evidence of possibly why that is. The other thing that they announced in New York City, Uber Eats launches prescription delivery, so you can get your prescription drugs delivered by Uber Eats. Whether or not I would want to do that, I don't know, but maybe there's a market out there of people that need that service. Uber reported soft Q4 revenues. When we jump into the numbers, we'll see evidence of these. Okay, and obviously a lot of it has to do with still a lot of shutdown environments and people staying at home and kind of a work from home trend that is likely to be permanent. So we'll see that in the numbers. When we take a look at these, we've got the gross bookings here. This mobility is basically like your traditional get an Uber ride. And we see last year in 2019, this was for 3 months in December, we were at 13.5 billion. And this year we're at 6.7. So down 50% over the last year. But you see what has kind of made up for it here is delivery, which is like Uber Eats and things like that. That is up 130%. But we see here for the total went from 18.1 down to 17.1. So we're still down about 5%. Now, from a revenue perspective, we see here that delivery is up a whopping 224%, but our mobility again is down 52%. So it's kind of a push-pull environment for Uber. I think when you take a look at the stock chart and how much this stock has run, investors are starting to kind of price in, well, look, this mobility is going to come back. Whether or not it comes back all this year or part of it, they're going to assume that this number is going to come back, and Uber's going to run into some pretty easy comps to kind of beat these numbers. Whether or not delivery stays this hot is another question that investors probably should be asking themselves. Now, when we come take a look at the revenue here, we've got 3 months ended here and year ended here. We've got 19 over 20 and then 19 over 20 on the year end. We see here revenue for the last 3 months went from 3.7 billion down to 3.1 billion. You see here for the year ended from 13 down to 11. Again, just that Uber, just the fact that you can't get an Uber ride. A lot of work has moved out of the big cities like New York City and San Francisco and places like that where Uber is extraordinarily popular. It just continues to create a drag on the revenues. Now, they have lots of other expenses as well. And we see for the most part, these expenses are actually down, and you'd actually expect that. So we've got total cost and expenses down here. Last year, they were at 4.7 billion down to 4 billion. So you like to see that. And for the full year, we went from 21 billion down to 16 billion. Now, this company is still losing money, but it's kind of flat year over year, at least on a quarterly basis. We went down from 971 down to about 900 million, or about 877 to be exact. Now, for the full year, we went from we'll call that 8.6 billion down to 4.9. So they did a nice job considering that their number one business and probably their most profitable business was basically under attack the entire year. They did a nice job. Now you see the net loss attributable to shareholders very similar to the loss from operations. So we can take that for what it is. Now, they are diluting you. That's the other thing to keep in mind. We had 1.25 shares last year. Now we're up to closer to 1.8. And so it's just something that you want to keep in mind. They are issuing a lot of shares on this company, mainly to kind of finance operations and some of these acquisitions as well. Those are pretty taxing when it comes to that. Now, from the balance sheet perspective, not great, quite frankly. Take a look at the beginning of 2019 or the end of 2019 to the end of 2020. We had about $11 billion in cash and cash equivalents. That has been whittled down to 5.6. Again, they made some acquisitions, things like that. They probably had to burn through a considerable amount of cash to kind of keep these operations going. So we see that took a hit on these current assets, went from about 14 billion down to about, we'll call that 9.9 billion, almost 10 billion. So total assets coming in at about 30 33 billion. You might ask, well, where did the bulk of that gain come from since we went from 31 to 33? It's tied up in goodwill. So when a company like Uber acquires another company, a lot of time some of the overpayment or the amount that they pay gets dumped into this goodwill, and so that's why you see a hefty hike in here. They also acquired Postmates during the year and maybe a couple other kind of minor acquisitions, so it really beefed up their goodwill, so you can kind of discount that if you want to. Now, moving on to their liabilities here, we see here that it's a pretty clean from the liability side. We've got total liabilities coming in here at $19.5 billion. They do have a little bit of this long-term debt here as well. Sitting here, it's up from 5.7 to 7.5, but nothing too bad. This is a company that will probably have to continue to lever their balance sheet either through debt raises or through more of these share offerings, or more than likely actually a combination of both. So from a balance sheet perspective, not the best I've ever seen Uber been, but considering everything that's gone on, not too bad. Now, moving over the stock chart, the stock's actually making an interesting formation. To be honest with you, we've kind of had this, upper trend line here that has created a little bit of a resistance anytime the stock has gotten to it. And we see here this, I just drew this line in going back to about December 4th. And we see here the stock topped out again on January 14th of this year, and it just topped out today right here on this line. So it actually is so far proving to be a relatively significant trend line. So the stock has pulled back a little bit. If you want to get this on a pullback, you're probably looking at levels like this, maybe down at $55. That's about $7 from where the stock is right now. Whether or not you get that opportunity, I'm not exactly sure. The stock has created a nice little uptrend. Now, right underneath this $55 average for Uber, we do have this large gap here. So if the stock pulled back to 55, I'd actually anticipate maybe this gap right here being filled. That would take the stock down to about $52. So any kind of pullback, that's about $10 where the stock is today. Any kind of deep pullback in Uber could create a buying opportunity. You do have a fairly large amount of price action in this range between, we'll bump this up to 49 and 55. There's a fair amount of price consolidation in there, so there should be plenty of support for this stock if it pulls back to this range. If it doesn't, this 55 level should act as some support, which again is about $6 or $7 where the stock is today, and should help keep Uber up. So hopefully you guys enjoyed this one. That was Uber. We'll be back again soon with more videos on the channel. Thanks for tuning in. Good luck with your investments.